If you're questioning your positions, remember, shakeouts and market declines are supposed to feel convincing and pressure you to do stupid things. That's why we use stops and we follow the rules. And because we follow the rules, it makes things a lot easier and, as we like to say, takes the guesswork out of trading. This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. On today's episode, we're going to stop talking about how to trade and show you exactly how we do trade inside the 10-minute trading room. So be sure to stay to the end so I can show you exactly how to get that $5,488 worth of trading education for free. Let's get into it. I'm going to show you every single trade that we put on over the last couple of weeks and how we traded them. And hopefully you'll find a ton of value with this. So here's everything we've traded inside the 10-minute trading room. The How to Trade Stocks and Options podcast is now exclusively on ShareVision.com, the first dedicated streaming platform for the world of finance. And that's where you can find us every single week over at ShareVision.com. Just head to ShareVision.com to learn more and type in 10-minute stock trader in the search bar. Come like and subscribe. I can't wait to see you over there at ShareVision.com, the first dedicated streaming platform for the world of finance. Good afternoon, traders. Yes, don't adjust your screen. I am in practically black and white, and I have no idea. If you only knew how frustrating it is to click the same buttons every single day and come back to a totally different feed every single time, it feels like, I don't know, it's just weird. So thank you guys for coming today. Happy July the 14th, the year of our Lord 2022. How are y'all doing today? If you're here, let me know by saying hi. We worked on some fun projects this morning. I was all over Rudes. We were coming up with, well, not like all over her because that probably wouldn't be appropriate, but we came up with some pretty fun stuff for our members of the trading room. Let me show you real quick. Let me show you. And we'll definitely be coming back in a little bit when everybody gets here, to make sure that everybody gets a chance to see it. Let me hit the share button here. Share screen, screen 2, and add to stream. Oh yeah, we talked yesterday about the hats, and so we worked on it this morning, came up with 3 hat designs. We've got the hashtag 10-minute stock trader hat. We've got the 10MinuteStockTrader.com logo hat. And then just for fun, because I saw it on a different hat, and I was like, that's fun. I like that one. We got stonks. So I want you guys to think about this. I definitely want to do a vote. You guys voted on a black hat yesterday versus a gray hat. Now, do you want the hashtag? Just type in 1, 2, or 3. 1 being the hashtag, so like left to right. Number 1 being the hashtag, number 2 being the logo, and number 3 being stonks. These are what will be the webinar challenge prize. Now, to win the webinar challenge prize, it's really easy. Just come to the webinar tomorrow. Come to the live web class that we're doing tomorrow morning, and then invite someone else. It can be your spouse, it can be your sister, it can be your cousin, it can be somebody that you think would be interested in knowing more about what we do. And then I'll ship you out one of these hats. So let me know in the chat. We'll catch up with the votes here in a little bit. But number 1 is the hashtag 10-minute stock trader hat. Number 2 is the 10MinuteStockTrader.com logo. And number 3 is stonks, hashtag 10-minute stock trader. So let me see who's here. Maria is here. Good to see you, Maria. Tyler, glad you made it, dude. Donna, hey, I'm so glad that you made it again, Donna. Donna, you are so consistent, and I'm really proud of you and glad to see you again here today. Ernie, what is up, my friend? Living on the beach, living a good life. Victor says, hello, hello, hello. Absolutely. Donna likes number 2. Very cool. I don't presume that people want to wear our logo. That's why I'm not just like, here's our logo, right? Sometimes I want to have like the personality with it. So that's why I wanted to leave it up to you guys to help decide what the design will be. So I'll leave that there for a couple minutes and we'll come back to it. But don't forget about the web class tomorrow morning. If you want to invite your friends, the way that you would do it is having them go register at, oh, come on, show. We're using this new platform here, and that is not showing on the screen? Why is it not showing? Hang on a second here. Oh, maybe I have to make room for it. Oh, okay. I learned something here. I have to make room for the text to show. Webinar.10minutestocktrader.com. That's the website you need to send them to so that they can get the reminder emails and they can come and join us on the live web class tomorrow. Very cool. And I just learned something. All right, let's catch up here real quick. Donna says 2, Victor says 3. Nima, good to see you. Yeah, of course we're going to vote again. I don't just assume what you guys want. I want to make sure it is what you guys want. The vote again, Nima, this time, it's not just for black or gray. It's for what do you want on the black or the gray. Number 1 is the hashtag. Number 2 is the logo. And number 3 is stonks. Hashtag 10 Minute Stock Trader. We got 1 vote for the logo. We got 1 vote for stonks. So Nima asked, what's the streaming platform we're using? Okay, great question. I had Restream.io, and I had that for ages, like literal ages. And click the wrong button. And that one, if you guys remember, that was one where the sound started cutting out like weirdly, and there was no consistency with the sound whatsoever, and it was really, really, really frustrating. So I moved from that over to StreamYard, which is what Benzinga uses. And StreamYard has been great. No real issues there, except, and you guys have noticed this, the video will lock up every once in a while. And I was like, I don't know what's going on with that. I got high-speed internet. I shouldn't be having upload issues that are causing it to lock up. So I started looking around. I found this new one. It's really new. It only came out a couple months ago, called Melon, like a watermelon. That's what we're using today. And I mean, all 3 of them are so similar, but Melon seems to have the best combination of video feed that isn't locking up, as well as consistent audio. And I'm even watching it on my phone here using my not my Wi-Fi, but my 5G network to make sure that it's not locking up. And it seems to still be working okay. All right. So yeah, we got 2 votes for the stonks hat, 1 vote for the logo hat. We'll come back to this in a little bit. Don't forget about it, because I certainly won't. All right, that's my background. Let's go to that. And let's move into, let's actually move into our market analysis. So let me go click that real quick. All right, welcome to the 10-minute trading room. This is how to trade in only 10 minutes a day, and exactly how to take the guesswork out of trading. And with our 10 minutes to freedom trading strategy, as you know, it always starts with the market. And our strategy really has kept us out of trouble when a lot of people figured that the bull market was back. No, we quantified that it was not here just yet. And we did that by looking at the 10-day being under the 20-day with price under the 50-day. Does that still remain the same? Let's go to SPY. SPY's almost green on the day. 2 days in a row had these huge reversals. So we do have, I'm sorry, let me clean this up. All right, the 10-day, 20-day, we'll add the 5 as well. 20-day, 50-day. Okay, we got it all. So we have the 10-day, which is the blue line, under the black line, which is the 20-day, and price is under the red line, and that is the 50-day. So all 3 of these line up with confluence to say that this still is a bearish trend. Now, with that, we also want to know how many stocks are participating in this trend. Well, if we look at the MMFI, that's going to show us that 30% of the stocks in the S&P 500 are above their own 50-day moving average. And we're just looking for 50% to be above that point. So 70% of all the stocks in the S&P 500 are still below their 50-day moving average. Lastly, as FinClub, our artificial intelligence data came through with a red day today. Now, when all 3 of these line up, that makes today an offensive day. An offensive day is when everything lines up, but we have to start with our existing positions, reducing risk as we go so we don't have any issues. So let's look at our 3 existing positions and see, do we need to take them off? Do we need to add to them? What do we need to do? Oh, no, we only have 2 now. That's right. We took off Comcast yesterday. So let's go look at Philip Morris. Philip Morris has been outstanding. This has been, and I love when this happens, a trade you put on and you don't look back. It just works right from the moment you put on. So with this trade, let's ask ourselves a few questions. Are profits locked in? And that's defined as the trend line past the entry point. Answer here is yeah. We're using the 5-day, which is the gray line, and that is healthily past our entry point, which is now at 92.04. When that happens, the only exit signal we need is the back-tested trend line being broken. So we're going to move our planned exit point down from 93.50 down to $92 on the nose is the 5-day moving average right now. But as you can see here, we're not only past the first, not only past the second, but also past the third entry point today. So we need to decide if we are going to add to this winner. Now the objective here is if a trade is winning, we want to run that guy as long as possible. But if it's winning as well, we want to stack our winners. But we only want to stack a winner if it is set up as if it were a brand new trade, because now we're taking on additional risk. We have profits, but we don't want to have to give up any of our profits. We want to just stack them and keep them running together, not have one work against the other. So let's do a couple things. One thing I need to add on here is the Keltner channels, and that's going to show us where we consider the oversold position, and it is right at that point right now, right at it. In fact, let me change this to our bearish checklist here. It is right at it. It does not set up on the intraday. So if we look at the intraday, we can actually see that it's being bought up from the low of around 88 now to 89.35. So on the intraday, that kind of knocks it out. I would tolerate this being right on the line because it's still on the line. But if we were to put this on as a brand new trade, we would skip this trade. It would not pass through our chart filter because of the intraday chart. Now, what I'm hoping to see, honestly, is maybe a day or two where it comes back up into this range, kind of settles, and then goes back down. Like we talked yesterday, looking for tennis balls that bounce around versus eggs that just splat. Now, in this case, an egg splatting would be going the other direction. But we want to see a tennis ball that kind of bounces back in our favor, and then we can load it back up. So this one we're not adding to the winner today. But now let's go to Carvana. Carvana. I don't know, it depends on where you're from. Here in Texas, it's a Carvana. Carvana is like a weird way to say it for me. But this one tracking beautifully. And let's ask ourselves these questions. Are profits locked in? Well, holy moly. If we're following the 5-day, it just right today crossed past our entry point. Now, our 5 days are exit signal. We're going to hold this until it goes back above it. So we're going to move that from 22.84 down to, let's call it 21.91 today. If price crosses above 21.91, we're out. Or if it crosses above the gray line, we're out. But until that happens, this is solid. Solid trade. Nima, I appreciate you specifically, Nima, on this one because you were telling us about the liquidity on the options chain on Carvana, and in fact, there is now more liquidity than there was the other day. I was looking at that earlier today. I was like, other people picked up on it, Nima. So good work on that, my friend. Nima did have a question. Should we roll PM? Earnings are in 7 days. Let's take a look. Thank you, Nima, for the reminder of the earnings. Let's take a look at it. Right now, nothing to do just yet. The way that we treat earnings is if it is, we have this set up here, hang on. We're going to ask ourselves these questions on the day before earnings. The first question is the trade already profitable? Absolutely it is. Does the expected move of PM at that time, right before earnings, break the trend line that we're following? And if no, then we hold it through earnings. If yes, we will close it. So let's talk about that expected move real quick. Let's go into PM. And let's go to the closest options chain to earnings, which would be this one here. the July 22nd, where we're in, and then you would click the buy for the calls and the buy for the puts right there. Gives you a total value of 378. Now we take 378 and we multiply that by 85%, so 0.85. That gives us $3.21. That's the expected move. Now that's a really small expected move on an $89 stock, which I'm kind of happy about. So if we were to look at it right now, 321 above price at this very moment puts it right at 92.52, which is 50 cents greater than our planned exit point. So if the market kind of settles down in the next couple of days, we could see the implied volatility on this contract. And when the implied volatility contracts, the expected move should contract. And we actually might be able to hold this one through earnings following the plan. If not, we'll go ahead and exit. We'll take our wins and we'll be happy about it. So Nima, great question. That is the plan for PM going into earnings. So we've covered our two trades that we have on right now. We've reduced risk in both of them. Both of them look great. So now let's move into the next step, which is right here. And we're going to run the charts. Now the easiest, fastest, bestest way to do that is with the AI chart bearish power scanner. It'll go through all the stocks in the top stock list, and it'll show us which ones are looking really crummy. And if they are looking crummy, we want to take advantage of that. All right, so some of these we've looked at before. And let's do this. We're going to, how many came through? 17. Not too many, but some. Clone this watch list. Copy that. Now let's open our scanning help file. That's going to transpose this so we can paste it into our relative strength scanner. We're going to do this in Edit, Paste Special, Values, in cell A5. Now if you need this, just head on over to the trading room and go into the relative strength scanner, and I'll show you everything you need step by step. We got a few. All right, let's clear these guys. So we have 5. Yeah, 5. I'm going to take these. I'm going to go back to TrendSpider. I'm going to paste them in here, and we're going to back test these. That's the next step in the strategy here, is we know the market's bearish. We know these charts are bearish, and they're set up not just from a price perspective, but also relative strength perspective. Now we're going to test them on the back test to make sure that our stock that we have and our strategy match up well together and have a positive expectancy. And then when it does have positive expectancy, we want to find where the better of the 2 points would be, either the 5 or 10-day moving average. So let's go through each one of these. So zoom, and I know we looked at some of these before, but we're going to treat them as if it's brand new. I mean, this is one we back tested a day or two ago and is like really performing well. But I don't remember the reason why we didn't get in, but we got to follow the plan. So strategy test, 10-day bearish full on zoom comes out to 91%. 5-day comes out to 35%. So we like the 10-day on here. So I'm going to mark this one with a 10-day PEP, planned exit point. We're going to mark it blue so we can come back to it. Let's go ahead and dock in. This is another one I feel like we looked at. The 10-day is 405. The 5-day is 1. Still positive. So we like the 10-day here. 10-day planned exit point, mark it blue. Next, let's move to AIG. Negative expectancy. So we're going to mark it red and not come back to it. I'll tell you what, I could probably do this so it's bigger for you guys. Yeah. I like that this new app we're using has more layouts, right? So I can do this or this or this or this or this or this. There's more layouts, and I like that. That's better for me. Okay, let's go to now. Negative 23%, so that's a red. And then lastly is ARE, negative 17%. Let's do this real quick. I want to run it one last time. Just see if anything else pulled through. We got 17. 2 of them are ones that we've looked at already this week. Oh, yeah. We got a lot more, actually. 31. We got twice as many this time. 36. We're going to just do that again. Just for fun. Clone watch list. Copy. Scanning help. Shabam. I think I'm going to put all 36, yeah, in one go here. Then go back to the relative strength scanner. Select all. Edit. Pay special values. All right, let's give that a minute to work and see what comes through. By the way, while that's running, if you haven't already voted, please vote. We don't have too many votes right now. Would you rather have the number 1 hashtag 10-minute stock trader hat, number 2 a 10-minute stock trader logo hat, or number 3 stonks hashtag 10-minute stock trader? We got 1 vote for the logo hat and 2 votes for stonks so far. So all you got to do in the chat is type a 1, a 2, or a 3. Now let's go back to here. We've got a few. Let's only filter these. Now, I know there are some people who have not voted, Tyler or Ernie. Who else didn't vote yet? Maria just voted for stonks. Very cool, Maria. So we got 2 and 2. Ernie says stonk it. Stonks are in the lead now, that's for sure. Okay, we're going to take that back to the Benzinga list here. Edit. All right. Yeah, we got a few. Okay. Dockin still on our list. We lost one of them. We lost Zoom. That's okay. Let's take a look at match. Oh, man, this is one we looked at recently, too, that did really well. And I don't remember why we didn't get it. Probably liquidity. Okay, but that's all right. Following the plan. 10-day is 10%. 5-day is 11%. 5 days a little better, so we'll go with that. 5-day planned exit point. So this one's going to be blue. I'm going to mark him. Go to Met. Stonks for the win, that's for sure. Okay, Met has a negative expectancy, so we're going to mark it red. Fast. Fastenal, negative expectancy. 2 more. AFL, positive on the 5. Negative on the 10. So we're not going to do that. And then team, negative 27. What is team? Oh, Atlassian. We use that. That's the what does Atlassian have? They use it's something we use here in our business. What is it called? It's the checkbox thing. God, I cannot remember it off the top of my head. Either way, it's something we use here as well for Productivity Suite. Okay, so we're looking at Doc-In and Mitch. Match. Okay, so we have our stonks all picked out. Let's go to positive expectancy. Now we're going to look at these 2, and we want to find out if they will pass our 2nd and 3rd entry points. So let's go look at Doc-In and Mitch. Let me do this to clear everybody that's not the first 2, in fact. Oh, it wasn't the first 2. Number 2 and 3. Okay. All right, so Mitch, we need to see it past 56.54. Does the back test pass 56.54? It does. Way out in the future, but it does. It does. 56.54. Okay. Just going to draw this on here to keep up with it. Let's type in 56.54 so we can visually see it. Yeah, that counts. Okay, so Mitch looks good. Let's go next to Doc-In. We need to see that below 26.98. Just type in 26.98 real quick. Does the back test pass there on the 10-day? It sure does. Oh, actually, let me go back to Mitch real quick because we're going to follow the 5-day, and that was the 10-day back test I had. Pull this. Okay. The 5-day does not cross where the 10-day does. We're already planning on following the 5-day. So it's really close. We can go one step further to see, but this one's on the border for me. Dock in, however, we're following the 10-day, and that handsomely clears there, so that's not an issue. Okay, let's go now into Mitch, and we want to see for liquidity 21 days to expiration, 250 plus open interest, 50-cent bid-ask spread, 20% or less extrinsic value. And it gets us to usually around 80 delta. Nima says he can't come at 6 a.m. Not enough incentive for them, but I like the hat. Nima, I think I could hook you up. And I understand the 6 a.m. thing. I understand. Okay, let's do this. Let's go now into Tastyworks, and let's go to 21 days to expiration. Let's look at open interest, and let's see who's coming through here. So we don't have 250 plus here. We don't have 250 plus here. Don't have 250 plus here. I don't like 8 days. Let's go 36 days. Okay, we have 250 plus here. That one could work. Let's look at extrinsic value on this. That's too much. Too much extrinsic value. That's 276. 276 divided by 870. That's 32% basically extrinsic value. So that costs too much on our extrinsic value to get into. And that's legitimately the only one in the span of 36 days that has any liquidity whatsoever. And liquidity is super paramount. You can't get in, you can't get out. So yeah, Mitch is off our radar. I guess that's why we didn't trade it the other day. Let's go to dock in. That was the other one that passed. All right, so let's, oh, this only has monthlies. Okay, no problem there. Tons of liquidity, no problem there. Let's look at open interest. Oh, no, extrinsic value. I sigh because I'm frustrated. Because 2.25 over 810 is going to be 27%. That's too much for me. I want 20%. 25% I'm stretching. 27% I'm not happy with. The next one is at basically $12. And like I say, I like to keep that under 10 for you guys. So this one doesn't have the liquidity that I want to get into either. Digital Ocean Holdings. And that's okay. There are days where we try and days that nothing comes through. And that'll be it. All right, let's do this. Let's move into our final thoughts. We went through our whole process here. We went through the whole process here. But we didn't have anybody that passed through liquidity, which is our final barrier in order to get into any trades. And that happens. So let's move over into our final thoughts. Let's give me a second here. I do have one, but I don't have it pulled up yet. Oh, sorry. Looking on the wrong spot. All right, so this one was written by our friend Mark. And I'll tell you, I can tell that he wrote this on his phone in a hurry because there's typos here. But that's okay. We will forgive him this time. But let's talk about it. He says, if you are questioning your positions, remember, shakeouts and market declines are supposed to feel convincing and pressure you to do stupid emotional stuff. That's why we use stops, and that's why we follow rules. I love it when I'm not the only one who says these things, but we can find other experienced professional traders who are saying the same thing. If you're questioning your positions, remember, shakeouts and market declines are supposed to feel convincing and pressure you to do stupid things. That's why we use stops and we follow the rules. And because we follow the rules, it makes things a lot easier and, as we like to say, takes the guesswork out of trading. Okay, that's going to be it for today. Be sure to come to tomorrow's live web class. I'm really excited about this. I'm putting the final touches on the last section right now, and I got to say, this could be one of the best ones. So if you can't make it live, really do try to catch the replay over the weekend. It'll be available publicly for a hot minute, usually either that weekend or the following week. And then it goes into our trading room forever, and nobody else can ever access it, which is pretty cool. So thank you guys for coming to the trading room today. Be sure to come tomorrow morning and invite some friends so I can send you guys out some sweet hats. We will talk soon. See you on the next one. Hey, don't forget, before you head out, head to secretinvestingbook.com right now to get your free copy of The Secret Investing Book. This is how to finally get a positively unfair advantage in the stock market. And it has 13 of the secrets that Wall Street does not want you to know. And I want to send this to you for free today. Just help me by covering shipping. And the way you can do that is by going to secretinvestingbook.com. That's secretinvestingbook.com, and I'll ship this out for you right away. Thanks so much. I'll see you.